What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we continue to consolidate in a trading range, which means a strong breakout is coming in the very near future. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today in SPY we were up 0.3% and we continue to see consolidation after we got this very bullish impulse between the 50 EMA and the SPY support breakout level at 408. So right now we still have no clear direction where the market wants to go from here, but we will know once the price action confirms it, either on a breakdown below 408 or a breakout above about 418. Which means we will still have resistance just above at 420. There's still a very high likelihood that the bears are waiting to attack until SPY gets all the way up to 430, but you can't completely ignore the resistance levels at 418 and 420 because bears can decide to show up whenever they want to because they still have full control of this market. So right now the bulls are doing everything they need to do to go against the strong bear trend, and the bear trend is weakening each and every day that SPY continues to close above our 20 simple moving average. And by tomorrow our 20 simple moving average could start to slope up and start having that positive slope of attack, which will benefit the buyers and not the sellers. So the two most critical support levels, which are your risk levels as a bull, are still at SPY 408 and SPY 402. Because if we break down below those levels, there is an increasing probability that we could make that next leg lower. And that next leg lower could be a retest of the low at 381 or a brand new lower low at 376 or 370. So it's very critical that the SPY bulls protect these support levels at 408 and 402. So do get a lot more cautious as a bull if price action starts breaking down below those levels. But more than likely we'll continue to see consolidation as the bulls build up the energy to attempt to break out above 420. So 420 is going to be that very strong resistance level you need to pay attention to because there will be bears at that level. Whether or not the bears are strong enough at 420 to prevent the bulls from getting to 430 is to be determined, and we will let the price action do all of the talking at these levels. So be prepared for a big breakout from this consolidation on either a breakdown below 408 or a breakout above about 418 to 420. It should be a very impulsive breakout, so know exactly what you're going to do or start positioning accordingly and then set your risk accordingly at those levels. You can notice that the volume is dropping off quite a bit as we continue to consolidate in what looks like a bull flag, so we will see a spike in volatility in the very near future once we do get that breakout. On the Nasdaq 100 triple Qs, we were up 0.33% and we continue to close over the positively sloping 5 EMA, and we could be very close to having our 20 simple moving average starting to positively slope as well. So on the triple Qs, we also have this bull flag look, and we are consolidating between about 314 and about 306, and 306 is the bullish breakout level. That was the previous high that the bulls had to break above, and they are now using that level as support, which is a bullish indication. However, if we start losing support at triple Qs levels of 306, you're looking for a retest of the 20 simple moving average right around 299. And we still do have that gap to fill as well. So on a break below 306, you're looking for strong support right around 299 to 300. And if we break below our 20 simple moving average, you do need to be on guard for a retest of the previous low at 285 and possibly even a new low as we make the next leg lower at 276.8 or 269.5. So get a lot more cautious as a bull if triple Qs start losing support at 306 and 300. Otherwise, you're looking for the bullish breakout above about 318 to get to the next resistance level at 330, and there will be a lot of bears waiting at these resistance levels. So continue to develop a trade plan around the breakout, whether we get the bullish breakout above 318 or the bearish breakdown below 300, and then just trade accordingly, knowing where your risk levels are. And remember, you always have to take on risk as a trader, so make sure you're putting yourself into high probability setups and try not to get whipsawed in between critical support and critical resistance, because you will want to wait till price action gets at a much more well-defined risk level before you start entering your trades, because this is still a very volatile market. On the Dow Jones DIA ETF, we were flat on the day, going absolutely nowhere, and the price action continues to get rejected around that resistance zone at 333 and the 50 EMA, which is right around 332. We're still closing above the 5 EMA, and our 20 simple moving average is flattening out, so we are getting a lot more bullish momentum the longer the bulls can hold the Dow Jones above 326. So the next bullish breakout in the Dow will be a close above 333, which means we should see a run up to 340. Otherwise, we'll see the bears taking over and start closing back down below 326, and our 20 simple moving average is at 323. and we do have a gap to fill right around 322. So we have plenty of support to the downside that the bulls can still use to get their higher low, but if we do start breaking down below about 322, we could come all the way back down to retest the lows, and those support levels are at 310 and 308. So watch these very critical support zones, and do understand if the bulls do get a bullish breakout, the bears will be waiting just one leg higher at 340. So you will want to watch price action at these very critical zones. On the Russell 2000 IWM ETF, we were up 0.43%, and IWM did try to break out above the 50 EMA, but we still see sellers above that level, even though this is still a relatively bullish looking chart with a higher high and a higher low on the daily chart. So critical support on IWM is still all the way down here at 183 and 180. And if we start losing that support, you're looking for a retest of the low at 175. And below 175, we will very likely go close the gap at 165.7. But right now, the small caps bulls are looking relatively strong. So if they do get that bullish breakout above 190 to about 191.5, they will very likely scare away the bears, which means IWM could start running all the way back up to about 205. So it's a very bullish breakout above the 190, so watch that level very closely. And if we do see the bears showing up at that level, which they will likely do so, look for very strong support down here right around the low 180s. On the Arkk ETF, we were up 0.76% today, and we still see Arkk consolidating right around this zone in the low 40s. But we don't have a bullish breakout until we get a close above 47 and then back above 52. Stay cautious and bearish on this ETF until we get that bullish breakout, because it's still likely that we could be trending back down towards 33.7, or we need to wait for confirmation of that bullish breakout. Downside support is right around 42, 40, and 39, so watch those support levels closely. On the VIX, we were up 1.05%, so we do see the VIX still holding this support zone right around 25, so we don't have bullish confirmation of the VIX breaking down until we start closing down below 24. From VIX levels of 24 to 25, we could find support and still get another spike in volatility, which could go hand in hand with a pullback from these levels. We're getting a lot more bullish once the VIX crushes below 24, and a lot more cautious if the VIX starts spiking back above 30. On Bitcoin, we're currently up just over 5%, and Bitcoin is back up to retesting this resistance zone just below 32,000. So if we do get rejected from this level, it will look like a double top. If we get the bullish breakout above 32,000, I still favor a very quick trip to 37,000. And if we get that bullish breakout above 37,000 and just above 38,000, it will look like a bullish breakout. So from here in Bitcoin, you can get a lot more bullish if we start to break above this resistance. Otherwise, it will look like a very bearish double top rejection, and the neckline will be down here right around 29,000, which should easily take us back down to retest some of these lows right around 25,000. So get a lot more bearish if we see a strong rejection at 32,000 and see price action slicing back down through this neckline. On NVDA stock, we were up 0.35%, and NVIDIA continues to consolidate just below this resistance zone at 199. And we will likely test that level even in the bearish scenario where we get rejected and start to trend lower. But right now it looks like the bulls are starting to buy the dip and the bears are losing some of their strength. So if we do see NVIDIA breaking above 200, you're looking for the next bullish breakout on a close above 210, and above 210 we will be looking bullish and very likely start running up here to close these gaps above. If we get rejected from any of this resistance above, you're looking for strong support at 179, and below 179 you're looking for a retest of the low at 161. And remember, we still do have a valid price target at 150 as long as we are below 210. On Tesla stock, we were up 1.6%, and Tesla still continues to see the price action closing below all the moving averages, but we are still above support at $700. The next bearish breakdown will be a price action breakdown below 700 for a retest of the low at 620. And below 620, you're looking for that next leg lower with a target of 571. From here, we need a bullish breakout on a close back above 762 to about 776, which should give us a retest of resistance right around 828. And above 828, we should retest resistance at 900. So right now, it does look like the bears are still in full control in Tesla stock until we start seeing a bullish breakout, because the bears still do have the benefit of lower highs and lower lows and a bear trend. On Apple stock, we were up 0.52%, and Apple did close back above the 20 simple moving average, but we are seeing a rejection from this resistance zone right around 150. Remember, Apple needs to hold above about 142 to 144 and get that bullish breakout above 150 to start looking bullish. And above 150, we will still have strong resistance right around 156. But above that level at 156, we'll very likely start trending up here to close the gap at 174. So that will be a very bullish breakout once we see that price action. If we lose support at 144 to 142, look for a retest of the low at 137, and below 137 we will likely hit the price target at 130. So watch these very critical support zones because that's going to tell you where Apple is heading next. On the financial sector, we were up 0.29%, and the financial sector still is getting rejected at the 50 EMA and might come back down here to fill the gap before we see any higher prices. The next bullish breakout will be the close above that level at the 50 EMA. The industrial sector was up 0.42%, testing the 50 EMA as resistance and failing to close above that level, but the bulls are starting to look a lot stronger in the industrial sector. The healthcare sector was flat on the day, closing back over the 20 simple moving average yet again, and if we could see the bulls bouncing off of this level as support and getting another bullish breakout above the 50 EMA, we will start developing a bull trend in the healthcare sector. The energy sector was down 0.11% today, and we still have the bull trend, and the next bullish breakout will be the breakout above 90.5, and we will have a valid price target once we see that price action all the way up there at 99.6. But do not look too far ahead, wait for the confirmation of the breakout, and look for strong support down here right around 85. So jumping back over to the S&P 500, we are without a doubt in a very strong consolidation phase, stuck between resistance and support, while the bears are waiting for higher prices to likely get aggressive on their shorting and selling, and the bulls are developing energy, getting ready to battle the bears. We're going to see a strong breakout in either direction, so know these critical support and resistance levels and have a trade plan to act accordingly. Always use proper risk management and be very patient because you don't want to get whipsawed between critical support and critical resistance. Just be patient, be disciplined, and if you're using proper risk management, you should be doing just fine in this volatile market, and we should know very soon whether or not we're getting a leg higher from here or a leg lower once we see a breakout from this consolidation. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.